Okay, I'm recording this on Zoom. So let's talk about a couple of things. TNC brings up a great question. So we had this with Win, NVRO, and a few of this FGen today. How do you handle crazy spreads on options, and what's my approach? So my personal approach, and Jamey can give you his opinion, my approach is, first of all, I want to find the most liquid option, the one that has the most open interest, the most volume. Then secondly, I want to try to usually split the bid and ask. So I'm going to do a limit order, and you can usually see what the last actual transaction was. You know, it'll tell you what the last price was. And I'm always, like, for example, if I'm trying to catch a put, if I'm trying to catch a put, I'm trying to catch it on a push, so that way I can get on the lower side. I can get closer to the bid than the ask. And if I'm trying to catch a call, I want to, if the spreads are wide if I'm trying to catch a call, then I'm going to wait for a pullback, because I want to try to get filled as close to that bid as possible.
Yeah, I mean, spreads really don't matter to me because the entries where I take them at, I mean, even if I buy on the ask, they usually 9 times out of 10 they work as soon as they get put on. So, I mean, you could, if you're buying at the right spot, then the spread shouldn't matter as much. I mean, if you're buying puts at the top of the range on the beginning of a red candle, and at the bottom of a range at the beginning of a green candle, and then using the previous candle as your stop, I mean, those are the best entries to take, because you don't want to take calls at the top of a green candle or puts at the bottom of a red candle. So your entries are really key as far as whether you're splitting the bid and the ask or whatever. But I mean, that's what I usually try to do too. Whenever, if it's not a market order, I'll just put it somewhere in between the bid and the ask. Usually they get filled. But when I'm scaling out, I like to scale out on pushes. That way, you can sell on the ask. If you're selling out on pushes and on drops, then you can actually get filled on the ask, because people are just going to come in and buy what you're selling.
Yeah. So let's talk about, I totally agree. Hopefully that answers your question. So good question, good topic, guys. So let's talk about what I was talking about near the end where we saw the push. So I've always considered this what I call my walk, run, sprint. And it all has to do with volume, and it has to do with the extensions on the EMAs. So typically what you see, and I'll share a few things with you guys here. So if you notice the volume, see how the volume is staying pretty consistent. You have the little drop off, you have the little peaks and valleys here, but the chart is still going up. The couple things I look for is when I see volume started to drop off like this, and then the chart's still going up, is I'm expecting a pullback. Because if you have decreasing volume but the chart's going up, that's a divergence. And one of two things is going to happen. You're either going to have a big push, or you're going to have a big yank. Either way, the opposite's about to come. This is a divergence. But what I was talking about during when I was telling you guys to start locking in profits, don't get greedy, is usually you have, at some point, you'll have what we call like either a parabolic move or a blow off move or a capitulation move, where you see volume start to speed up. I call it the walk, run, sprint. And if you think about when you start walking, then you're running, and then you're sprinting, how long can you sprint before you run out of gas? Not very long. And the same thing happens in trading. So you see volume, it's starting to walk, it's starting to stair step, starting to speed up, starting to speed up, starting to speed up. And then you have this big push, this big candle, and it's a blow off, and it just eventually it's just going to top and run out of gas. And when what happens when you run out of gas? You just fall over in exhaustion. Not to mention you started to get this big separation, this big gap between the 9. And anytime I start to get a big parabolic move like this and blow off, you have to be locking into these pushes, because first of all, premiums on the options side, unlike trading equity, your premiums are going to be juiced. They're going to be at the max potential when you're getting these big parabolic pushes. So you need to be selling in these so you can maximize your options, because this pull is coming. It doesn't mean it's not going to continue higher. It just means you're going to get a pullback consolidation. It needs to take a breath. It's running out of gas. Because what is happening here is first of all, you're having buyers step in. You're having chasers step in here because they think they're missing the move and it's going to go higher. And then you have shorts covering saying, shit, I'm getting squeezed. I need to get out of my position. So you have a combination of things going on right here, which is why you see the volume increasing. Then you see the shorts have covered, so they're gone. All the buyers and chasers have stepped in, so now that stops. And then you get the giant pullback as sellers sell into these extensions and pushes. And then you see the chasers say, uh-oh, I bought the top. I need to get out. So they sell too. And then you see the big pullback. Does that make sense? So it's a little bit of market psychology. It's a little bit of technicals, a little bit of, trading 101. So DFIN, good. I know you're the one that asked. So yeah, I think we could see if China retaliates with some sort of tariffs. I wouldn't be surprised if futures get a little spooked on Sunday night. We gap down coming into Monday morning. But I mean, based on what we just saw, throughout midday, they probably buy it right back up. I think the tell will be on Tuesday what happens. Monday afternoon into Tuesday. If they sell off this market, then this was just a pure squeeze.
Yeah, I think if China's going to retaliate,
yeah, you'll see futures react to whatever they do on Sunday night. What other questions you guys got? Man, this was an ugly close on Uber.
as far as trading the open goes, if you're new to the room, you should really be focusing on a couple names. I mean, PSK lays the notes out so clearly. You should come in and look at those notes and look at the stocks that have the best risk reward. There's going to be, maybe 2 on that list that fit that criteria that have more risk reward than the others. So I would focus on those couple names that have the best setup instead of trying to look at everything and it just overwhelms you because you're not going to catch all of them, that's for sure. You just need one good trade each day. That's all you need. So don't come in and psych yourself out trying to watch everything. Just pick you a couple. Because the simpler you keep it, the better off you're going to be.
Yeah, I mean, every day I miss moves because I've focused on 2 or 3 at most at the open. That's all I can watch. I can't focus on anything else because I'm watching certain levels. I'm looking for flag breaks. I'm looking for downtrend or uptrend breaks. I'm watching the volume, watching level 2 on my main focus. After we've settled in the first 15, 20, 30 minutes, then I can start looking at everything else. Because also I know I got people like Jamey and Nick and Levi that are watching the FANG names, that are watching the SPY. So I don't have to try to watch everything. I can't. Talk about my process. So if you're in my class, you know what my process is. But for everybody who's not, basically my process is every night and every morning, after hours in pre-market, I go through everything that's gapping up and everything that's gapping down. And then I look at all the earnings plays. I read all the news. I read the earnings reports. And then I figure out, based on where the market is, based on the news, the sentiment in certain sectors, where I feel where we're going to have the best setups, what are going to have the most range, what are going to have the most eyeballs, so that we can get the most bang for our buck or find the best trades. And then I usually have like 12 to 15 on my list, and then I try to narrow it down to like 5 or 6 to put into pre-market notes. That's why you didn't see Yelp and a few of these other ones on the list, is I didn't put Dropbox on there. I had it on my list, but I dwindled it down because I felt like when, JD, I felt like it was going to be a short. I felt like a couple of these other names, this FGen, things like that, were going to be our better plays. Thanks, Raj. That's kind, man. I appreciate that.
Another thing I want to touch on this here is if you follow trades like PSK, post all his trades, all the mods post all their trades. If you don't understand that trade and why we took it, then don't take it. Because if you don't understand it, then you're not going to know how to manage it. I mean, there's a whole lot more options than just buying here because he bought here and selling here. I mean, there's several different ways to lose on options. So if you come in here and just to follow trades, you need to put in the time and the effort before you go out and risk your hard-earned money and just follow it blindly. You need to sit down, and if you don't understand it and you want to know the reason we took it, just ask. DM us, we'll tell you. It takes a few seconds to explain why we took it.
Mm-hmm. It's a great point.
So many people come in here and get burnt just following trades, and that's not going to help you long term. You should be in here to learn how to get better and more consistent, and just following trades is not going to put you where you need to be. It's not going to make you self-sufficient. It's going to make you dependent on us.
It's a great point. Great point.
Don't throw away your money. You got to respect your money in the market, or the market's just going to separate you from it.
So Wojtek, personally, I use a 10-minute, an hourly, and a daily chart. Those are the 3 charts I'm staring at when I'm trading. Those give me the best overall view of the trends of support and resistance, as well as, what's kind of where I think it has range to. I think that, I'm always amazed at how many people try to trade off a 1-minute and 2-minute chart. And I think until you're been doing it 5+ years, I don't think you should ever look at a 1-minute chart. I just, looking back, that's how I was trained. And I just feel like that's such the wrong mindset to have. You need to slow things down. Look how many times we say we missed the open, or we missed it, or we missed that, because everything's going so fast. So you need to do everything you can to slow things down. And one of the ways to slow things down is to zoom out and take a bigger picture. I trade off a 10-minute chart all day, every day.
Yeah, 10 minutes is the smallest time frame I to trade off of. And I mean, like PSK said, the longer time frames slow the market down for you. Because if you're looking at a 1 minute, 2 minute, 3 minute, 5 minute chart, there's a ton more candles in those charts than on 10, 15, or hourly.
Well, and if you even remember last week when things were choppy a couple of the days, what did we say? We're moving to the 15 and the 60-minute charts. Because even in chop, we were trying to get some clear view of what was going on in the market. So we backed out to even further time frames.
Yeah, those longer time frames will help you. 10-minute is really good chart where I take most of my entries at, and then once I'm in, I'll switch it over to hourly. That 10-minute, a candle can come back into the 9 and get you to the point where you think it's going to go against you, but it was actually just a fake out. And if you look on the hourly, it was still in trend per your, per whatever trade that you were holding.
Yeah, JB, I always have the 10-minute up, and basically my 10-minute is what I'm looking at the open is I'm looking at support, resistance, pre-market, after hours. I have trend lines drawn, either downtrend, uptrend, and I'm looking for it to either break those trends or push or pull into support or resistance, along with my EMAs. So if you guys are on screen share, you can kind of see how I have my chart set up. So this is a 10-minute chart. This blue line is the 9 EMA. This purple line is the 21 EMA. And then the yellow line is my 50 EMA. And those are the 3 EMAs I use on my 10-minute chart. And they're because I've tested them, I trust them. Look how this works. At the open, this is JD. So at the open, JD pushed right into this pre-market high, got rejected at the open. That would be my first indication once it got rejected at the pre-market high to take this short if it couldn't break it. And then once it started to pull back, then you could have grabbed it short, pulled right to the 50, bounced, came right into the 9 EMA, made a perfect bear flag, got rejected. See how it rides the 9, breaks below the 50, comes back. And this is why I use the 21. Because if it tests the 9 and it gets rejected by the 21, and I found that just the 21 works perfect as kind of like a secondary support and resistance. And you can see as long as it stays below the 21, I'm still in the trade. The other thing too is I look at these 9 and the 21 at the gaps between them. So the closer they are, or if they're sitting right on top of each other, that's a no trade for me. That means there's no clear direction. There's no, neither the bulls or the bears have control. So when I start seeing, if I'm short and I'm seeing this gap get bigger between the 9 and the 21, that tells me there's strength to the downside. Now, once I start getting this gap and the separation between the 9, this is when I know the stock is extended and I'm selling into these pushes because I know it's going to retrace until the EMAs catch back up. Once the EMAs catch up, then I'm going to be looking for rejection, or if it's going to break back out over it and break the trend.
Yeah, a good rule of thumb is, for me anyway, if we're in pre-market and all the candles are under, the EMAs, most of the time it'll get rejected by those EMAs and it'll be a sell day. I mean, most of the time it works like that. Probably 70% of the time. So just like Amazon today, under the EMA, it came up, got rejected, and then so-called rode the 9 until we bounced. So if you come in and you're looking at something and it's under the EMAs, the pre-market candles are under the EMAs. Usually it comes up, gets rejected, and then it'll sell off. If it's over the EMAs, it'll usually dip down, make sure those EMAs are going to hold, and then go higher for the day. Just a good rule of thumb. And it's not 100% correct all the time, so you got to keep that in mind, but it's something to keep in the back of your head as far as direct directionally, which way directionally for that day.
Yeah, so Wojtek, are you on screen share? I'll show you something if you are. I don't know if they are. That person is.
I use the 950. Those are the only two I use.
So let me answer that question for everybody who is on screen share. So when I'm trying to figure out support and resistance in pre-market, okay, so I'll just tell you. So when I'm trying to use support and resistance on pre-market, I always look at the day before because that's my most recent buyers and sellers. So I always, like for example, if I'm looking for a stock to break out, I want it to break the pre-market highs. See how we had this, well, you can't see it, but for those on screen share, see how we had this little double top here pre-market on JD? It pulled back right into EMA support, made a nice flag, broke the downtrend, pushed back up right into that area, right into that double top pre-market, got rejected. So once you see this rejection, that's your key. You can go short and then just put your stops at that high a day if you wanted to take it short. And based on the fact that JD always sells off its earnings, this was a great risk reward. And then look what happened. Where did it find a bottom? Right at the top of this, which, this is after hours. So after hours, basically your prior resistance becomes recent support. So you can see right where it came into this area, it's 28 area, and held. So you can use the prior day highs and lows, and then look at the SPY. Look what the SPY did today. So you can see the SPY where it came right into this area, where it kind of got rejected over and under, popped right into that area, got rejected, came all the way down and then tested, blew right through these lows. But see how yesterday's lows were acting as resistance here until it could finally break through. And then look what area it had to test next. These highs from yesterday, right in here, is right where you saw the push and then the pullback. Traded Netflix off the bottom and sold my calls way too early. Any advice on staying in the trade? Get out because it's hitting up against the 15 May.
Switching over to the hourly time frame will help you with that. Okay. If you get in a trade, like you said, if you bought it at the bottom, and you switch, and as soon as you bought, you switched over to the switched over to the hourly, you can see right where it was bumping into the 50, where you said it was just crossing the 9 on the hourly. Or you could say on the 10-minute, you could say I'll just use a candle close up under the 9 EMA as my exit. But you got to know your levels. You got to know where the next spot of resistance is going to be, which you wasn't wrong in what you did, but it just depends on what time frame you're looking at. If you were looking at the 5-minute or the 1-minute or whatever, those EMAs are going to be a whole lot closer to wherever the candle's set up. That's why we say on a 10-minute frame, it just slows the market down, and you're looking at the bigger picture.
Yeah, Kate, are you in screen share? Okay, so here's Netflix. So you were selling into the 50. There's nothing wrong with that. But this is where letting your winners run and scaling will help you. So for example, even if you had, say, 2 or 3 contracts, if you bought at the bottom when it started to break the downtrend and had this reversal, you could sell 1 or 2 into the 50 and then let a little bit on as long as it stayed above the 9 EMA. And this is why I use the 21, because you can see when my EMAs get close, like the 9 and the 21, I'm still using this 21 as secondary support. And see how it held? I use the 21 on the 10-minute because it's, like I said, I've tested it. It works. And it pulled right into the 21 and held the 21 and then pushed again. And that would have, scaling will help you let your winners run. When you're selling into pushes and into resistance areas, and then just leaving like a quarter or a little bit on to see if you can get some more. Then if it breaks back below, say if it broke this area, this support area, then you could get out. But you should be up on some. So, and then Paul asked if the EMAs flatten out or get together, is it a sign to get out? No, it's not necessarily a sign to get out. It just means if I'm in a trade, I'm just going to let it go to see if it'll continue on its trend. If they're flat or together, it just means I'm not going to take a trade or get in a trade if I'm not already in it. Because to me, there's nobody in charge of the trade. It's not a good entry point.
And you can also draw the trend out to the trend.
Yep.
I mean, there's many different ways to do it. It's
Totally.
what works best for you. It's something that you're going to have to practice. And using TOS, they have that on-demand feature. You can go back and trade previous days, and you can really practice those things and really figure out what works the best for your style of trading, because everybody's different.
So I drew a couple lines on Netflix here. Once you enter a trade, you can draw a trend line. You only need 2 points, the 2 highest points. You draw a trend line, and as long as this rides the trend, you're still in the trade. And then once it breaks over the trend line, you can use your EMAs to help guide you too. Because if you get a parabolic push, then you just want to see if the EMAs hold. Because you can see you got your next leg down. Then when you see the reversal, you draw a trend line. And then this is a flag. And then once it breaks this flag break to the upside, then you can go long once the trend is broke. You could have went long here. It's above the 9. It's broke the downtrend. You go long and then just risk the bottom of the candle. Peter, it's just something you got to try. It's just something you got to work on. Even if you're scaling out 3 quarters and just leaving on a quarter, it takes time to get comfortable with it, but it'll help build your patience.
General rule of thumb for trading is anything over 20-30 cents, start taking a piece at a time into these pushes. I mean, if you can go in there with 10 contracts and get 20-30 cents off of them, that's $200-300. I mean, obviously you want to capitalize on as much as you can, but I mean, that's why I say, having a goal each day and really focusing on just get to that point is the best way, is what's going to keep you around for a long time in the market. Because all you got to do is establish consistency in your trading to be able to get the confidence you need to say, hey, I can do this. So, I mean, scaling is really detrimental to your account. I mean, obviously you can hold everything and sell it all at once. That's fine too. But you can also hold those too long and it become a problem, a bad habit.
Yeah, Peter, you know, you bring up a great point. I never exit a trade because of my P&L. If I break a trade, if I'm breaking or if I'm selling, it means if I'm out of position, it means it either broke the trend, it broke my EMAs, or something about it broke. I mean, that's the reason I'm still in MVRO. I'm down on those calls or those puts, but that's because it's a bigger picture trade for me. It's all based on the earnings and the fundamentals of the company. Now, if it breaks out over, a certain level, I'm going to eventually have to cut it, but I don't think that's going to happen based on past experience with those kind of earnings plays.
Yeah, I mean, once you get past that, I mean, it just takes time to get you past the bad habits that you have. I mean, it takes time and work and dedication to want to fix it. But once you get to the point where you're just focusing on whether it was a good trade or not, it's going to help you immensely. Because I mean, if you're trading your P&L, then you're swinging for the fence every time.
And you're going to get, you're not.
Every trade you're swinging to hit a home run, and that's not ever going to be the case. The home runs are the rewards.
Well, in my experience has always been, if you're trading off your P&L, you're going to trade scared. And that's not a good way to trade. The other thing too is practicing your rolling. If you feel like you've got profits and you want to stay in the trade, that's when you look to start rolling. I mean, Hennock is great at that. Hennock rolls all the time and just locks in profits. That way you're playing with house money, and it teaches you to let your winners run and gives you some patience.
Yeah, I mean, there's many different variables into that. Like PSK said, trading scared. It could be a size issue. It could be a couple of different things that you can put on a trade and then immediately get scared.
Mm-hmm.
But you got to be able to be in the. You got to come to the market with a mindset of relax. You got to be relaxed and have your plan well thought out so that you can execute it, and keeping it simple. Don't put so many EMAs and trends and fibs and all this stuff on your chart that when you look at it, you can't even see the candles. Reduce as much noise as you possibly can and simplify it as much as you can. That way, you don't have all these other thoughts of I need to do this, I need to do this, I need to do this. Just strip it all down and simplify it.
I had to go through that.
I used to have all kind of lines and charts, and I mean, whenever you buy a trade, whenever you're in a trade, we're looking at the next spot of support resistance, and that's where we want to be scaling that first piece into. If you want to have at least 2-to-1, at least 2-to-1 risk reward. If you're buying at a spot that there needs to be 2 points of upside versus your stop should be 1 point of downside. I always keep my stop $1 from my entry, usually. But I mean, if you're, like I said before, if you're buying at the right spot, then you don't even have to worry about your stop most of the time. But it just takes time, guys, and it takes practice and dedication to want to get better. I mean, like I said, if you come in here just to follow trades, then you already lost. Might as well take your money out of the yard and burn it. But if you put the time and the effort in, it's just a time game after that. You come in and you work on it every day. I mean, it just takes time to perfect it and get to where you need to be. And as long as you don't give up and quit, then that's what kills me about most traders. They just come in here and just expect it to be easy, but that's never been the case. I mean, this is one of the most elite industries in the world. You think you're going to come in here and just make $1 million following trades, or you're going to come in here and it's going to be easy because you put on your first trade and you got lucky? It don't work that way.
Well, and I think too, Jamie made a great point, about simplifying it. And I tell the people in my class, I'm like, you want to do everything you can to eliminate as much noise as possible. I got so frustrated at one point early on in my career that I literally took everything off my chart except the candles, literally everything. I didn't have anything on it. I was like, I was all over the place. And now I've developed my strategy to where I have my primary and everything else is secondary. So for me, my primary is the candles and the volume and then my EMAs. Everything else is secondary to me. So, I have the auto fibs on my TOS, but those are all secondary. If you notice occasionally, Levi and I will have different price targets is because I use purely chart support and resistance. I don't use these fibs as my targets. I purely go to the daily and the hourly chart and I'm looking at support and resistance. That's what's worked for me and that's what I base it on. Everything else to me is secondary. It just helps me paint a picture, helps me build a thesis.
Yeah, using those pivots is the best way to go because, there's actual evidence of where the candle started and it stopped. Those fibs is just a calculation on wherever you draw the lines on the chart, and there can be flaws in that.
Mm-hmm.
So,
exactly.
Just strictly, you should really learn to read spots just based off where these candles have support and resistance, because there's no denying that.
Yeah.
And that's what the crowd does, guys. That's what every retail trader, they're looking at the same spot you're looking at, and they're going to be scaling out every spot that you see that you should be selling out. And that's why those spots are in the chart.
Yep. Yeah, if I'm looking at Netflix, for those on screen share here, I'm looking at where does the candles touch the most, above and below. So for example, like right here, you have the candles touching it here, and then this candle almost, but then you have two candles touching it above. So I have candles above and below. So to me, that's strong support or resistance. And then if you go across to today, you can see here, right where it hit it in pre-market, the candle hit it here, candle hit it here. These three candles worked around it. And then it also was here. Look how many times, if you go across this line, how many times candles touch it? Peaks and valleys. I call it over and under. Like how many times do I have candles under it and above it and over it touching it? And to me, those are the strongest points.
Yeah, most of it is just finding, like we said, just recapping everything, coming in here, looking at the notes, finding the couple best setups to have the best risk reward, being relaxed and being comfortable. You don't need to feel like you gotta make a certain amount of money each day. If you're putting yourself in that position, if you're trading with money that you don't have to lose, then those things add to your mindset. You don't need to put pressure on yourself to make whatever amount of money you need to do. And if it's just $100, you need to come in, you need to find the best one or two stocks that have the best risk reward. You need to be relaxed. You need to be focused on what you need to do. You have, lay out your plan. Just like PSK comes in here and puts his notes down, you need to be mapping out your trade after you find those first couple stocks that you like and that you have the best risk reward. Lay it out. If this stock goes up here and gets rejected, I'm putting on puts there. Or if it goes down here and bounces off this level, that's where I'm going to add calls, and lay it out and stick to that plan. I'm telling you, you can come in each day and repeat that process every day, managing the trade like you should be, picking the best entry. Like I said, you want to buy calls at the beginning of a green candle, and you want to buy puts at the beginning of a red candle. Your stop should be no further than $1, $2 away from your entry. And once you get that down each day, just coming in, rinsing, repeating that process every day.
Yeah.
You're just gonna seat you into a place where you're comfortable and you start seeing some consistency. But you got to get to that point. You just can't throw trades to the wall and expecting, to make money every day. You got to have the process. You got to have the patience and the discipline to get to that point.
Defense, I don't have a line drawn here because I didn't trade Netflix past 2 days, but also I don't always have to draw lines. I've done this enough on my charts where I can just see it. Yeah, Peter, absolutely. And again, I don't always draw trend lines the whole time because I can just see it. I just visually see it. Once you do it enough, you just see it. It's like head and shoulders and these H patterns and stuff like that. I don't need to draw lines on them because I just see it. Yeah, Jo. Yeah, this is what classes are like. I mean, Levi, Jamey, and I all put on classes, and this is exactly what it's like. This is what we do in the classes, because we can't do this intraday while we're trading. So it allows us to talk about specific topics, answer questions, show you our strategies.
Yeah, we go in depth in class and actually show you on screen share. In my class, I go through that TOS on demand and actually show you the trade, let the trade set up on demand and show you where my entries are, where my stop would be, what my mindset is. There's several different things that goes into the process, and you got to think about all the variables of that and be able to control the things that you don't need. Because the hardest part of trading is the emotional aspect of it. Because when it comes to money and a person quits on the emotional aspect of it, when you got money on the line, you got to be able to control that part of your brain and say, the worst thing that can happen in a trade is you get stopped out, and if you're managing your risk right, that stop ain't far from where your entry was. So that's the name of the game. You keep your losses smaller than your winners. You grow your account.
So Kate, my first target on NVRO is right here. We need to break these lows of 58. And then once we break 58, I want to see 55.80. Once that breaks, I want 54. That breaks, I want to come down to the 200 here at 52.